Okay guys, welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at thirstfortrading.com. I've been hosting webinars, or we've had a relationship with FX Street and myself for about 7 years now. Hi Vicky. And throughout that time we've tried to host different webinars on various different subjects. Okay, one of my specialist subjects, if you like, is Ichimoku Cloud. There are very few books that have been written in English about Ichimoku, or how to trade Ichimoku Cloud, and to a lot of people, novices especially, it looks quite complicated. I do apologise if I cough and splutter through today. I've come down with a bit of a cold, but we'll just get on with the job. And please do ask as many questions as you can during the webinar. If you do feel lost, or I start rattling on about something that isn't quite clear, then please do stop me. I'll just very briefly tell you about First for Trading. We are the retail arm of PIA First that offers banks, institutions and hedge funds trade recommendations on a daily basis. My function within the company is mainly FX. Okay, I'm not going to talk you through all of these slides. It's just about how our platform works and the various awards, etc., that the company has been able to achieve. So we're going to talk about Ichimoku Kinko-Hoi. We'll go through these slides first, and then after these, after the set of slides, we'll go to the live charts. We'll talk about some breakouts, false breakouts, what to look for with regards to Ichimoku. In its rawest form, it shows us very well for support and resistance levels. Okay, the actual cloud formation, the Kumo. But there's so much more to it. Okay, what I try to do in a lot of my analysis, which you will see when we get down to the live charts again, is I try to have forward indicators. Okay, a lot of market oscillators or indicators that we use are lagging indicators. You know, the RSI, stochastics, even if you use fast stochastics, moving averages. Okay, they have a tendency to lag the market because they're working on price action. And until those candles have actually closed, then that indicator doesn't formulate where it should be on your charts. Okay, what Ichimoku is good for is it casts support and resistance into the future. Okay, so it shows us where we should expect support and resistance levels to be at. It can be traded on its own. Okay, it is a breakout system, but I would recommend using it with a combination of other analytical tools, or your general flow. One thing that it doesn't do, unfortunately, it doesn't give us projections. Okay, so when we get a breakout, i.e. sort of euro dollar, which we'll look to in a while, it doesn't tell you how far it's going to go. It doesn't give you a support level because it's a cloud, and the cloud is above, so it's only giving you a resistance level. And what you can have a tendency to do there is obviously break it down through time frames. But if it's a strong trend, then which it has been, you know, there's a good chance that your monthly, weekly, daily, 4 hourly, hourly are all going to be below the resistance level. But as I said, we'll go into it. We'll look at the breakouts, false breakouts, etc. And today is just aimed at showing you how you can combine this in with your with the rest of your analysis. Whether or not you choose to use it in future is obviously up to you. One thing I will say is, until you get used to Ichimoku Cloud, if you've got a decent chart package, it's worth having it open in a separate window. So say if you're looking at 6 different currency pairs, just having one window open with just the cloud on, and then just keep on changing the currency. Okay, So Ichimoku Kinko Hoi. We're going to look at how it's formulated, okay, cloud breakout, the Zen lines, which work very similar to moving averages, okay, support and resistance, the lagging line, which is a very important aspect of Ichimoku, which a lot of people ignore, and the bias within the cloud, okay, inside the cloud. Where should we be looking for signals? One thing I will say, I do use Ichimoku, but price action takes precedence over the cloud. So if I'm got a 261.8% extension level, I've got an engulfing daily candle, and it's moving into the cloud, I will be aware of where that cloud support is, and there's a good chance we might get a small intraday bounce off it. But my bias will still be to the downside, but I might just use it as a better entry level. Okay, so we're just going to start off with a vanilla chart or a plain chart. This actually is going back to the sort of end of last year. It's euro dollar. Until it's the end of last year, the price is up around 138. Okay, and we're just going to overlay Ichimoku onto it. And immediately it starts to look confused. Okay, there's a lot of lines. You can imagine if you've got your moving averages on the top of there, and an RSI and momentum indicator, then you can start to get confused, or your charts can start to look a mess. What we're looking for mainly is the cloud. Okay, don't worry too much about what color the cloud is, because that is irrelevant. What we want to be aware of is the thickness of the cloud, where it's projected forward to, okay, where support is projecting into the future, and also when we break out the cloud, if it's to the downside, the cloud then becomes resistance. If it's to the upside, the cloud then becomes support. Like a lot of other technical analytical tools or formations, like a wedge breakout, invariably, if we get a wedge breakout, we'll come back to test the wedge before the actual strong sell-off or bullish bias. Obviously, it's a descending wedge. A lot of triangle formations, channel formations, head and shoulders formations will just come back to test our breakout lines. And a lot of the time in Ichimoku, we get that as well. And it gives us, if we have missed the entry, so if the entry level was overnight, it does give us another opportunity to get in on the trade. So the Kumo is the cloud, hierarchy. As I said, don't worry too much about the color or the crossovers. It's just about the weight of the cloud. So the cloud is made up of the Senko span A and the Senko span B, okay, the Kumo. Now, Senko span A is the average of the Tenkan Sen and the Kijun Sen posted 26 periods forward, okay, and the reason it's 26 periods, you remember we're using Japanese candlesticks in 95% of technical analysis these days. Some people use mounted charts, some people still use line charts, but most TAs, technical analysts, use Japanese candlesticks. So it only makes sense that we're using, or we look for products that have also been developed by Japanese traders. Okay, the reason it's 26 periods forward is because there is 26 working days in a Japanese working month. Okay, so the average of the Tenkan Sen, the Kijun Sen, we're going to talk about the Zen lines in a minute. Okay, projected 26 periods forward, and we'll also talk about this very relevant word here. Okay, the average, and that's what makes the Sen line slightly different than our basic moving averages, and we'll also explain that in a while as well. Okay, Senkan span B is the average again of the Tenkan Sen and the Kijun Sen, 52 periods forward. Okay, so 2 months projected into the future. And then we have the Zen lines. Okay, 2 Zen lines. We've got the Tenkan Sen, which is the turning line of the trigger line. Now this is similar to a 9 moving average, apart from it plots the midpoint. Okay, remember we said the average before. It plots the midpoint of the high and the low of the last 9 sessions. Now that's quite important. If we just flip back, okay, you can see how close it is to price action. But unlike a moving average, it doesn't just flow with the trend. Okay, you do get periods where it stops and goes flat. And the reason behind that is because it's taking the high and the low of the last 9 periods and giving you the average. So if the high and the low of the last 9 periods do not change, okay, this, unlike a moving average which continues to the downside, because it's taking the average price of the last 9, okay, this is taking the midpoint, and you get these periods of flats. Okay, it's a lot more relevant in the upper Zen line, in the fact that we get more flats, because obviously we've got 26 periods to work with. Okay, but it's a very good visual aid for spotting areas of consolidation. Okay, unlike your moving average, as I said, will keep on moving with the market, or it will keep on moving down because it's just dropping one period from behind and then adding one period on, so the average is still becoming lower. As opposed to that, we get these flat sections, okay, and they can mean a channel formation, a triangle formation, not really a wedge formation, but it will give us those periods of consolidation. You've just got to be a bit wary when we see flat sections, and it's just one of these added aspects of Ichimoku cloud that people don't look to. Okay, so it plots the midpoint of the high and the low of the last 9 sessions. Okay, then we've got the Kijun-sen, which is the standard line. Can everybody else see, or have I been talking to myself for 15 odd minutes? Guys, can everybody else see a chart? Okay, so everybody else can see a chart. I think you need to log off and log back on. GY. Okay, thanks for that. So Kijun-sen is again like a moving average. It plots the midpoint of the high and the low of the last 26 sessions. So we're getting back to that monthly period. You've got to remember, this is a 1 month period, 26 sessions. You can use it in time frames, but most Japanese traders will use it in higher time frames. Okay, they'll use it for a bias of a weekly or a daily call. Not many will use it too much further down. I do look to Ichimoku Cloud with a combination of other indicators down to sort of a 4-hour and hourly chart. Anything underneath an hourly chart, I lose my indicators. Okay, because I've already got my bias, and then from there, what I'm looking for is price action. Okay, trying to get in cheap, trying to move the trade up with the trend, etc. Yes, this is live. If you want to ask any questions. Okay, and then we've got the Chiku span, which is the lagging line. Okay, the very important aspect of the Ichimoku Kinko Hoi is the lagging line, and we will talk about that in a bit more depth in a while. But this plots the price line, okay, which is the close 26 periods behind price action. So basically, if we're trading here, this line won't be seen. What we'll have is this line live here, and we'll see that when we get back to the charts. I don't understand. Some people can see the chart, some can't. Let's load it back up. Vicky, you there? Some people are having trouble with the charts, Vicky, or the slides, I should say. Yeah, we're going to, Rocky, what we're doing at the moment, I'm explaining to people how Ichimoku is formulated, how to trade it, and then the second half of the webinar we'll go to the live charts. Okay. There's no point in me going over to the live charts until I've actually explained all the all the technicals behind Ichimoku. So, and I won't spend long on these either. Okay, so cloud breakout. So what is important, okay, I notice I said about price action before. So, you know, we've trailed into this cloud support here. It then engulfs and breaks into the cloud quite aggressively. Okay, we've got the depth of the cloud is a worry, but the speed and the aggressiveness of this candle formation, okay, takes out price action. I think it's 4-hour chart. Takes out price action for about, well, at least its sort of previous 20 odd hours, 24 hours. Okay, then moves into the cloud. Now we get the breakout, and this is what's important. Okay, the Zen lines have to be in order. So the trigger line has to be below the standard line on the breakout. Okay, if they are not in order, then it would normally mean that the trend is not strong. Okay, and there's a good chance it's going to be a false breakout. Doesn't mean it's going to be a false breakout in the long term, but what will normally happen is it will come back into the cloud, then move out through the base of the cloud when the Zen lines are in order, and then it will continue on that downtrend. Okay, so 3 things we want to look at. We want to look at it for a clear breakout, so a candle close below the cloud. Okay, we need the Zen lines in order, and most importantly, we want the Chiku span below price action 26 periods before. So if we count this back, which we have done here, this is 26 periods before, okay, and you can see that the Chiku span is clearly below price action. What happens? We move back, we actually get an engulfing, or it's not an engulfing candle, it's an outside bar, okay, which is quite a bullish formation. We get an outside bar, comes back in to test the breakout, engulfs again, okay, we move down, and again comes back to test here, and we move back down. So it's a negative breakout, a good negative breakout. Okay, everything's in order. What we have to be wary of is this Chiku span level line. If 26 periods before there is large cloud base here, and this Chiku span line hits the cloud base, there is a good chance that this will be a false breakout, because it's not just the cloud here in live price action that acts as support and resistance, it's also off the Chiku span level. So again, it's another thing that a lot of people don't look to, that the cloud can forward project support and resistance. Okay, it can be used as a breakout system, but it can also warn us through this Chiku span that the breakout is being false, or the support at that level. And again, when we get to the live chart, you'll be able to hopefully see how that Chiku span works when it bounces against the clouds. Okay. So again, just showing the breakout, 10 lines are in order, and she moves lower. And again, just a bullish bearish engulfing pattern on these slides. Okay, what is the bias when she's inside the cloud formation? Well, the bias, if she moves into the cloud from below, then the bias is still to the downside. Okay, if she moves into the cloud from above, then the bias is still to the upside. Until we actually break out of the cloud formation, okay, the bias still stands as far as the rules, if you like, of trading pure Ichimoku cloud formation stand. So here, we actually get a bearish outside bar off the top of the cloud. We're just indicating here that the bias is still downside. Okay, lagging line. We talked about Chiku span 26 periods before, can act as support or resistance along with price action. Okay, and we are going to get false breakouts like every other system or part of technical analysis that you use. what we're looking for is something that happens or works 60 or 70% of the time would be nice. Okay, so I haven't got a PDF on Ishii. I don't know if this is going to be recorded today. You'll have to ask Vicky. So you are going to get false breakouts. Okay. Here we've got one. It breaks to the downside, so we get an engulfing candle formation, breaks to the downside, but the Zen lines are not in order. Okay. They haven't crossed, and the lagging line is still inside the Kumo. You will note here, obviously, when this price action was down towards its lows, which is probably about 137.80, okay, that would have clipped, this lagging line would have clipped the base of this cloud. So it's actually the cloud base here, when the lagging line hit, that acted as support, okay, not the price action here, but here, coming back, this lagging line. Okay, it's only the reason that it looks like it's closed higher up is because that's actually where that candle closed. So you can see how this lagging line into the cloud, again, can act as support resistance levels. Okay, any questions before we start showing you some live slides, or live charts, I should say? No? Great. I'm just going to refresh this camera. Sorry. Okay, you should be able to see some sort of live charts now. Now, I do have Ichimoku overlaid on my charts. So my basic settings here. Okay, candlestick chart. This is actually 60 minutes, so we'll just move it off a bit. Let's move it to the weekly. Okay, it's a candlestick chart. It's actually a chart package called CQG. So it's a professional chart package that highlights, got quite a few tools on here. Okay, you can have a drink of water. Okay, you can be highlighted of chart formations. Down here I've got an RSI on, which is just a 15 RSI with a 50 line in the middle. I'm using that as a bias indicator. Obviously below 50 biases to the downside, above 50 biases to the upside. Moving it down through different time frames. And I'm just looking to average true range as well, just to make sure that if I am entering trades or trends, that I'm not sort of going in after a 60 pip move and the average true range for the day is 80 pips. Because I know I'm probably buying into the end of that bull run. Excuse me. And then I've got the Ichimoku cloud, okay, on the top. My moving averages is a 62 exponential moving average and a 15 exponential moving average. The reason that I use those is because I'm quite fanatical about fib levels. And the 62 EMA is as close to the 15 EMA as I can get. 62 EMAs is as close to the golden ratio as I can get. Okay, the 15 EMA is the 62 EMA broken down into shorter time frames. So basically, if I go from a 4-hour to an hourly, then these different exponential moving averages should mirror themselves going down through the time frames. And what I have found through years of analysing is that it doesn't matter what currency pair that I overlay these indicators on, it will have a tendency to work as support and resistance. Okay, so I'm not, as I said previously, I'm not looking to be informed about what has happened. I want to be informed about what is about to happen. And I know that these moving averages are forward indicators for me, because they tell me areas where I should be wary of price resistance or price support. Okay, and here, obviously, this is the cloud, and it's projecting it, as we said earlier, 26 periods. Okay, forward. So here, getting back to Ichimoku, we can see price action. Price action, as I said, takes precedence over anything. Okay, so I'm looking for inside or outside bars. Now, I don't necessarily mean bullish or bearish engulfing candles, because technically it is slightly different. What I want to see is price action to completely engulf the previous candle, and this is a typical bar here. Okay, so we've got an outside bar that completely engulfs the previous 2 days. So very bearish candle formation. Inside bars basically show investor indecision. So we obviously moved up from this cloud base. Okay, we formed not just 1 but 2 inside bars up around this high, which showed that investors were uneasy, or there was a lot of indecision around this level. And if we break it down onto a shorter time frame, which I'm obviously not going to do now, we would have formed a small triangle formation, okay, a consolidating triangle or symmetrical triangle formation, which has no bias. There is a slight bias. There's a slight bias to the upside after a move higher, but it's only very slight. Okay, and then she engulfs and she moves to the downside. Now you can see by this chart, and again it is a bit of a history lesson, this one today, but we can see how the cloud, if we take all the other indicators off, how the cloud acts as support. So she bounces off, moves higher, comes down, another outside bar at cloud support, and then again a breakaway to the upside. And on numerous occasions at the beginning of April, we used the base of the cloud as support. Now, like all chart formations, you have to wait for a clear close to the downside for that candle to be deemed closed, basically, a decent trigger. So here 130.54 was the baseline. We continuously pressed against it, okay, and we couldn't break to the downside. In fact, what I'm going to do, I'm going to get my other chart on. Okay, so this is when I was saying we're better off having a chart with just issue on, because I want to highlight the Zen lines. Okay, and here is our support. Okay, it just refused to break to the downside. Now, in our reports, what we did say was when it moved back up out of this cloud formation, we warned of a stalling in momentum. We warned of the fact that the breakout of this cloud formation to the upside was likely to be false. And the reason that we thought it was going to be a false breakout, where's my clips? Okay. In fact, I don't want to put too many indicators on here because this chart's not liking it too much. The reason behind that is because the Zen lines weren't in order to the upside. These Zen lines are dictating that we should actually be breaking lower, not higher. And also, we've got this large flat. So even though we have obviously got price action in this period, okay, in this period from sort of the beginning of April to beginning of May, so virtually a 1 month period, it is an area of consolidation, okay, and this whole formation can be seen as a large descending triangle formation. Okay, also the base side of it, sort of that level. That was just the Ichimoku cloud base. So we can see a combination of price action and a combination of just being wary what our daily cloud is dictating to us, that we want to be looking for lower highs okay, and we want to be looking for reversal signals off the trend. And what we got here, outside bar, okay, at the trend, outside bar at the trend, and this was an outside bar. Okay, it wasn't an engulfing candle formation. Okay, it was an outside bar, and to me they're as good, if not better, because they're showing that the market did move higher, but then the market completely reversed and moves to the downside. When she breaks, okay, unfortunately it was on a Friday, but when she breaks, the Zen lines are in order, okay, and we move it back 26 periods, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. Okay, so it's here. It's breaking to the downside. It does actually hit the cloud cover here, or the cloud base. And if you can see, as it moves in, it uses the bottom of this cloud just to produce this indecision day, okay, before we then get another inside Arami candle, and then it breaks to the downside. So a good breakout. Rejections are obviously lower. Talking about euro dollar. There we go, going back to fibs. Okay, so we were always looking for a downside break. It surpassed the triangle formation target level. Obviously that's the high to the low of the triangle, and then take that break line and move it down here. So it was around about 126 the figure. Again, it surpassed that. We also, if we're talking about Elliott wave, which I'm not particularly fanatical about, we've got wave 1, wave 2, an aggressive sell-off down to 161.8%. Engulfing candle, which gave a little bit of a spoof, but we're aware that this was probably going to be a small fourth wave correction. So again, the retracement tool. Where's the prime area for fourth wave pullbacks? So on a strong trend, it's 23.6% of the third wave. Okay, and a weaker trend, it's towards sort of 38.2. So it virtually hits the button. It was 128.19 was the fib level, and the high price was 128.25. So about 6 points out before we've had this strong move lower. Now, the bias is quite obviously still to the downside. And I think we'll be looking for around 122 the figure before we get any sort of reasonable correction, and by that I mean sort of 400 or 500 points. And until we get down to that level, we are due a small correction, maybe even up towards this sort of level, 126.95. But it's going to be choppy, and any moves back up, I think, are opportunities to short this pair down towards sort of 122. Looking at Ishi, okay, projecting. Obviously, if we rallied up, there's no resistance until this level. Okay, as price action moves lower, this cloud will drop with it, and it will probably end up giving us sort of 125, 126 resistance. If she moves back down to this sort of level, 122, and then pushes up. Any questions about euro dollar and Ichimoku in the cloud? And we can break it down into time frames. That's what I was going to say. So the bias, okay, taking it off our larger time frames, and again, I wouldn't expect you to keep sort of flicking through to longer time frames. But what you can do, if you've got a chart package that will take enough information for you, is just stick horizontal lines on where support is projecting support and resistance levels to be. And then in your shorter time frames, obviously as you flick through, this example here, as it was in this downtrend, you think, right, what's that? Why have I got a horizontal line on my chart? Then flick it through up the time frame. So you might be looking at an hourly chart. Go to your 4 hourly, then your daily, and then your weekly chart. Right, I've got some pretty decent cloud support there. Have I got any reversal signals in shorter time frames? Okay, and then break it down there from there, and always have in the back of your mind that, as I said, the higher the time frame, the more relevant the signal becomes. Okay, to me anyway. Somebody asked me how do I break down the bias from different time frames? And I do play a lot of poker, and I said, well, if you imagine your monthly charts, your sort of aces. Okay, if you look at AMRs, which are called acute monthly reversal candles. Okay, and then as you go through the higher time frames, and so your weeklies can be your king and your queen, then your dailies, you get down to your high cards like your 10, your 9, and then your 4 hours and hourlies, and obviously all the way down into 5 minutes, and the 5 minutes are 2. So you get your bias, okay, off your higher time frames, and you've got to remember the way that Ichimoku, a lot of these Japanese traders look to it. They look at it in a higher time frame, and I think that's one thing that you should remember. Get your bias off your shorter time frame, off your higher time frames, and then trade your short-term bias. And you can see here, sort of on this weekly, we used it as support, we used it as resistance, we used it as support on the way in. Okay, it broke out. What did it do? It retested with 2 inside candles. Okay, so 2 areas of indecision. Okay, but it was a good break to the downside. Then lines were in order. This was through the cloud. So if you notice, she came back and it's just dipped back up to test those through the cloud, and then we get this strong sell-off. Doji formation. It's actually a morning star. Moves up, and then we're sort of getting into price action. Engulfing 2 engulfing weekly candles here. And the rest is obviously history. Nothing on the weekly chart to say that this trend should finish. And then you take it through, your different time frames. Okay, we're in a downtrend, decent downtrend. We've tested 161.8%. We've now broken through it. We're looking very overstretched on a daily basis, and there's a lot of choppy price action in shorter time frames. And then taking it down again. Okay, even on this 4-hour chart, you can see how we came up towards this cloud resistance, posted a inside Arami candle, moves down, outside bar, which is a continuation candle. Okay, moves down, another outside bar, a continuation candle. Okay, there's no indication on these time frames that we're in for any particular rally. 1 hour, like I said, is just very, very messy. Note this breakout. Okay, I mean, I'm not really looking to it in shorter time frames, but Zen lines are in order. Okay, so it breaks to the upside. Zen lines are in order. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. But the lagging line is below price action. Okay, 26 periods before. So it's a false breakout. But most, I'm not saying you're novices, but most people that just briefly look to Ichimoku will see those Zen lines in order. We'll see it break to the upside. I think, yeah, I've got a good breakout there. Might be looking at fibs and thinking, yeah, well, that's wave 1, that's 2. Now I'm going to move aggressively higher. I think this is my sort of risk, or this is my reward area. This can be my risk area. So 1 to 1 is not looking too bad. Pull the trigger and it's a false breakout. Okay, and then she just keeps on moving back to the downside, and you can either, excuse me, you can see here how the cloud, even on this 1 hour chart, acts as quite decent resistance. And I'd say if you are trying to take signals off a 1 hour Ichimoku setup, then note where the areas of resistance are, but then purely use price action in sort of 10 minutes, 5-minute candle formations. So again, you want to be looking for those outside bars, bearish engulfing bars, to trigger a short entry with a tight stop. Because if it closes inside here, okay, the bias is still to the downside, but there's also, it's only a mild bias, okay, there is a chance that she will break to the upside. Let's have a look at another currency pair. Any questions up to now? Where can I get Ichimoku cloud from? Most decent chart packages should have Ichimoku on them. I used to use a system which is quite reasonably cheap, but very, very good, called Pro Real-Time Charts. They have, I think there's about 80 different indicators, oscillators on there, and I think they charge in the region of about €40 a month. But most FX brokers should have a decent chart package that you can use, okay, which should have Ichimoku on it. And I don't know whether there's any sort of PDFs on Ichimoku, unfortunately. Okay, anybody else want to pick a currency pair? Believe it or not, there's one currency pair that doesn't hold very well for Ichimoku, and that's dollar yen. Virtually all other currencies are pretty good for cloud trading. Like I said, don't use it as a standalone. Use it as support and resistance. Be wary of those false breakouts, and just flick through the time frames to get your overall picture, and look where that resistance is going into the future. Aussie dollar. Okay, so again, the weekly Aussie dollar. This is actually a false breakout. Okay, the Zen lines aren't in order. Doesn't really matter after that point where the lagging line. In fact, you might be able to see this. This is Aussie dollar. This is a false breakout to the downside. And again, it might be pretty tight, but the Zen lines aren't in order. It is pretty tight. And the lagging line, I don't have to go back 26 periods, I can tell, is in price action. So as far as the weekly cloud is concerned, that move low is false. I'll be looking to trade the short side. You've got an engulfing candle, an outside bar into the cloud. The cloud's not very thick. And like I said, they don't happen on every single trading opportunity. What I would note as well is just where the sort of support's coming in from this Zen line. Okay, when she moves, or if she moves any lower, the bottom of this cloud formation. Okay, so weekly was a false breakout. Daily, inside bar, engulfing outside bar off the high. Okay, again, moved in, chopped around inside, using the top and the bottom as support and resistance. Again, need to be getting down to your shorter time frames to look at sort of price action around those levels. And then this period of consolidation, again, it came back to retest. So we had a breakout, came back to retest. Probably hear my brain ticking over there. Just looking at waves, we've got 1, 2, 3, with this sort of choppy middle wave, if you like, and then this aggressive sell-off, obviously, as these commodities and stocks got sold low, and that's looking very close to a full ABCD sequence now. I'm just going to calculate. I'm getting off. I do get off the beaten tracker a fair bit, because sometimes other things catch your eye. There's 631 pips that move. It's gone through 98.45 would have been an ABCD formation. So getting back to Ishi, okay, it breaks to the downside. As it breaks the cloud as well, there's a decent engulfing candle formation. Then lines are in order. Lagging line is below price action. Okay, 26 periods previously. It's inside the cloud, and she does actually chop around a fair bit while this lagging line sort of struggles to clearly break out. And we do get a retest, and we literally go into the cloud by 4 or 5 pips there before a top's put in place. And notice how the cloud is moving away. So it's, instead of the resistance coming down, okay, it also can push away. So it's showing that there isn't a lot of resistance to the top side. And if she does get up towards these levels, then the resistance is also going to be thin. Now, if you note how it's dropped aggressively now. So price action at the moment, if it rallied, would be a long way from resistance. But if she starts to trade sort of sideways, this price action or this resistance, this Kumo cloud, is going to come down to meet it. Okay. Shorts of time frames. Okay, 4 hourly. It does look overstretched to me, and I'm struggling to see an aggressive move. I think there's so many shorts in the market now. I'm struggling to see an aggressive move lower before we get some sort of half decent correction back up. So again, it's used cloud as resistance. Just moves down. Then lines will be in order if you broke. Lagging line is above price action and a fair way away from the cloud. And then our 1 hour chart, you can see here we've got a decent breakout. Zen lines in order, 26 periods before. Well, count it in if you like. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 26. Very close, but it was actually above price action 26 periods before. Just here. So this is our lagging line. And then she moves to the upside, and she's just used it as support, moving back down. But I think we're going to probably in for a larger correction, and then a move back up in the Aussie dollar pair. So has anybody got any questions? It's been everybody's been a bit quiet. So 3 main things to look for. It's obviously support resistance projected into the future, but also projected back off the lagging line. We need to look for the Zen lines to be in order. Okay, we can look for periods of flats, which basically warns us of areas of consolidation. Not so much in the trigger line, but in the turning line, okay, which is like our 26 moving average. Okay, so be wary of flats on that one. And obviously be wary of false breakouts. And really, you want to be looking at higher time frames, and don't concentrate too much on the noise from shorter time frames. Look for those higher time frame breakouts, and also look for those higher time frame support resistance levels. One fault, well, it's going to have a few faults as well, Ichimoku. It's not a 100% trading system, but one of the faults that it has, and its biggest fault, is that it doesn't show you where to take profit. Okay, or it doesn't project you. If you've broken to the upside, then sometimes it's very hard to find where your next area of resistance is unless you're using some other type of analytical tool. Is there any questions at all before we wrap it up? No questions? Okay. I hope you enjoyed it, guys. We'll be back again next Tuesday with a different subject. Normally at the start of the month we look at these AMRs and we look at price action on sort of 12 different currency pairs to try and analyse or get a long-term view for June. I don't look at crossovers, no, because again they're just lagging the market too much. Okay, enjoy yourselves, good luck, and I hope you found it educational, and I'll speak to you again soon. Okay, cheers guys, bye now.